let everyone know we're starting, and we're going to cover a lot in this video. I'll be re-uploading it to YouTube, so if you are watching this on YouTube, don't forget to like, share, comment, subscribe. If you've got any questions, of course, ask them, and underneath this video is my free training. If you're watching on TradingView, as always, this is where we're at. Press the like button now, please. That would be great. Ask me a question, and similarly, my free training is underneath the video, as are all my socials. If you want, I post daily, and I post very frequently on all areas of markets. So let's go ahead. Great to see you. And of course, if you don't know me, I'm Will Sebastian from the Be Profitable Trading Academy and multi-asset data trader myself. So we've got a lot going on in markets. If you just look at the indice markets across the board, this is on TradingView, of course. You've got S&P 500 is down, NASDAQ down, Dow is down, the Nikkei is down, the DAX, the CAC, okay? Now, you'll know if you follow me, if you've been watching my videos, watching my streams, keeping up to date, you'll know full well that I said the indices are going to fall, and you should very much be sure. I said it repeatedly, over and over and over and over again, and lo and behold, they've fallen. They've fallen very, very much so. So we're going to talk about how to handle that now. We're going to talk about the outlook for future videos, watching from here, what I'm interested in, what I think we will get, where I think we're going to end up more or less in the longer term. So I'll start off doing that by looking at the NASDAQ, because a lot of people normally ask me in regards to the NASDAQ. If I open it up now, you can see quite a few things actually. Now we looked short over here within a retracement from here, okay? And we spoke a lot about the global economy changing vastly and it not looking as rosy as everyone sort of thinks it is. And I still remain with that. And the reason why is if you look by zooming out, first of all, you can see we've just come up and up and up for an extreme, literally an extreme amount of time since the financial crisis, since the dot-com bubble. And what you've got currently is a monthly candle with very, very early rejection on it. And what I mean by that is if you start to put your timeframes down to something like your weekly, you can see that this new forming weekly downtrend, okay, is still slanting down as we expected. Remember, we spoke about being short here, okay, and here. And we're really looking to trade the trajectory of indice markets. It's very predictable when you're looking at market sentiment. You know it's slanting, you know if things aren't as good as they should be, and that's when things start to fall. Now, if you look at this candle here, you'll notice it's pulling down quite harshly. And for that reason, I wouldn't be shocked if this low gets broken eventually, and there's a continuation of this downtrend in line with what I've drawn. I wouldn't really consider getting long too hastily. I think really, if you're going to buy into the NASDAQ, I would like a much further fall, and I would probably presume, and the reason why is because if you look at your 20 moving average, okay, your 20 moving average was last hit really over here. You had this amalgamation of MAs. This was a really good long entry, by the way, because you just got in at the foothills for the rally. So you had your price up, you had a big green candle here and a slew of big green candles for a sustained period of time. And the reason why I look short here is because of that. You know, I mean, look at your stochastic oscillator. It stays up and up and up for an extreme amount of time. It can't last, okay? It cannot last, and you have to have some kind of reaction. And that's exactly what you got. So you are still very far off from this moving average, which is your 40. It's not a big moving average. Normally, you know, the price is going to come back there relatively frequently unless you've got an extreme rally, okay? Now this isn't really extreme, it's a harsh rally there, but within this 40 moving average also lies key support and key price rejection, of which you can clearly see at the point I've just labelled, okay? So that is why I would like it long here, because you're going to be coming back to a early key moving average, and at the same time you'll probably coincide with key support and where you've seen price rejection in previous times. So if you wanted to short this, you should have done it here. You're too late to short it now. Okay, so don't bother entering yet. If I drop to my daily, it doesn't look particularly strong to the upside, does it? It shouldn't, because what's happening is we're downtrending. Okay, lower lows and lower highs are what make a downtrend, and you've got the opportunity to short within the downtrend as well as buy. Many of you did it there when I said it was long. Many of you did it there when I said it was long. I think that won't last. I think this isn't going to hold. And I think for that reason, you'll come down here and you'll be able to buy in there. At which point, obviously, your low low will look a lot different and your parallel channel will change. Okay. So long term, I'm still short biased on all indexes. I'm doing that because this has just been a massive rally. I don't think it's going to hold or sustain itself. You can see this already if you look at the monthly. That is incredibly weak, isn't it? Does it really look like a big push continuing this way? Not to me. And just to say as well, if you look at the move, you've only come 23, a measly 23% of a retracement. It is tiny. That is not far at all. And even coming back to where I've just drawn, it's only 38.2%. It's not far. All right. So that is why I believe that. And you can again see with your nearest MAs, you haven't hit them since May, for a considerable period of time. And again, if you look to the left, there is key price rejection there. There's key price rejection there. So what are you going to do? I wonder. Okay, so that's your US100. If you're just coming into the stream or you're just watching this back on YouTube, don't forget to like, share, comment, subscribe. Underneath this video is, of course, my free training. Don't forget to grab that too. I'm going to load up the S&P E-mini futures market now. Now the S&P has actually fallen a little bit more heavily than the NASDAQ, although their moves basically are hand in hand. What you do have here, which I like, is this. So I'm going to go to the weekly just for this. Now I mentioned it being long there, okay, but I did say to exit early because you had very early resistance here. It has since fallen, and you can see, much like what we saw in the NASDAQ, this trajectory like this. Now, this push, okay, I'm just going to delete this for a second. The bounce you can see on your weekly, which I'm going to label now, over here, didn't really do you any favors. Now, this is a really good lesson in trading because trading, as you know, and as many people hear me repeat on a constant basis, whether they're in my academy or not, it's all about using, it's like solving a puzzle. If you just look at what you've seen already, you really can form a good bias for what you think is going to happen. Where I've drawn this red arrow, there is immediate rejection. Where I've drawn this red arrow, there is rejection. So clearly, people aren't buying it. Clearly, there is no buy-side bias there. Because if there was, like there was here, or more so there, or things like this, these big green candles, that is what you're really looking for. If you tried it once, tried it twice, and you're still not getting anywhere, it's likely that you can solve the puzzle for yourself. With that as well, it's easier if you just look actually at this time frame, the daily, because it tells you a lot more, and you can see it all. If I draw a parallel channel, okay, like this, that's your parallel channel. You can see your pop up here to the upside gets rejected. Your pop up here again, slightly lower down, gets rejected. That is also a high as well. These are your lows. Now, the thing is, when the market retraces up, so you come up like this, and then you come up here, you fall, and then it gets hit again, and it's still failing to go up. Clearly, therefore, there is sustained downtrend. And with that, what you can see now, again, with this candle is no big rebound here in line with these lines I've drawn like that. And you've got big red candles pulling you down like you had here and there. Okay, there and there. These big juicy red candles slamming you down, right? So your push up, in other words, is small. And of course, think about it like this, okay? If I'm looking for a downtrend continuation, okay, can you see what's on my screen now? Look at this, right? This is really, really important. So if you want to write it down, feel free. That low then has this low. Now, if it's a downtrend and your bounce is coming after you've fallen beneath the low, how can you be buying this? That isn't going to help you because that wouldn't reflect a continued downtrend, which you think it is. So again, it's all about solving the puzzle. It's far more likely it's going to be down here before it pops up, you see, because you've seen it already. You've seen it there, then it's here, a lower low. If you want to get long, it's going to need another lower low. It doesn't make sense to buy early because you're not buying within what you've just seen as a natural forming downtrend. Okay? And funnily enough, it just so happens it coincides with all this glorious price action. Okay? All of this is very, very strong and you can see it very, very clearly. Okay? So there's a lesson for you in trading trends, and that is where I like it long in the future. I do think that your downtrend will continue just for now. I think in the longer term, markets like this are going to fall because, like I said, you came all the way from here on the dip with COVID, all the way up there. It's an awfully long way. Okay, you've only had minor retracement. The global economy doesn't look particularly appetizing. 117% up, and then a slight move back, and now you're up again. So it depends how things play out in the very near term. I'd rather take it just under this low. I think that's a really good tech zone near a 4200. I'll trade the market as it is in stages. Even if I think the market is going to fall based on this, it's likely that it's going to take a while. So really wouldn't be shocked if you do bounce and you teeter along and you don't immediately fall or rise. That wouldn't shock me at all. Something like this. I don't think you're going to get that immediately. I don't think you're going to get anything like that immediately. But you don't need to guess either of those outcomes. All you need to do is trade what you can see today. That's all that's important, what you can see now. It's a good philosophy in life, I think, for a lot of different times too. Your Dow Jones, just to mention, because we're on US indexes, you can see on the daily, if I draw it out, you can see a high to a high like this. That's your downtrend this time. Okay. And again, I wouldn't be shocked if this continues. Don't like the state of the global economy and geopolitically as well. And I wouldn't buy unless you come under like that. So my bias really, long term, I think you'll fall on indexes, but I'm looking long on most of them now. I called them all short. Many of you took them short. If you were short, I would just close it up for gains. And it's really important to note that although I think it will get lower as I've drawn, it does not mean that it's time to short. Okay, you should never short if you've just seen something like that, because you should have done it up here or there. This is too late, because if it comes up, which it very well may, straight away before it comes down, you'll lose your money. And that's why people lose money trading, because their entries are crap. They're too late or they're too early. And that's why I teach people. So yeah, that's your US indexes. If you are learning a lot from that, do press like, comment, share, and subscribe, and we can move on now.